Let me know if you can.
Oh yeah.
Yeah, you can do that.
This meeting is being
So is
recorded by
it
the whole.
is it
Yeah,
is it recording right now? This meeting is being recorded by the host. Or,
yeah. It's recorded in the contact corner
okay.
too.
Okay, that's sick. Okay, so we just
Bless.
found a way around it.
Yeah, that's cool.
All right, sweet,
I think
sweet.
I think that might be recording for you as well, though, so it could be eating up your storage as
Nah,
we speak.
it's only for him. It says the host or participants. So come, let's start. It's 4:15 now as well, and there's 44 of us. All right, cool. It's gonna have to be interactive, yeah. All right, cool. So let's talk about the idea of overconfirmation, yeah, because you see, what can happen is this. You see, when you learn a lot of new things, especially in chapter 3, it's very easy to get flustered, isn't it? Like you can learn the age and range, the CBDR, and you might try to think it needs to have this. Otherwise, I'm not going to entertain the trade. Do you see my point? That's a lot of the times what happens with people. But I want to ask you this, yeah. The more confirmations that you look for, now don't get me wrong, there is a level of confirmation needed. But what I'm trying to say to you guys is there has to be a fine line between the confirmations needed, and then you see when every extra unit of confirmation is added, it just brings, no benefit. Do you know what I mean by every extra unit added of confirmation? It's like this, innit? You see, when you're thirsty and you start drinking a drink, yeah. The first units of that drink, so like the first, sip or one, that's the most refreshing. That's gonna refresh you in it. But you see, by the end of it, you're not, every extra unit of you taking that drink in, digesting that drink, it's gonna refresh you less than it. It's gonna give you less benefit. Do you see my point?
Yeah, it holds less value in it.
Yeah, it's gonna benefit you less. It's the same thing with everything in life, innit? And confirmations is no different. So what the point is that I'm trying to make to you guys is the more confirmations that you're gonna look for, very specific confirmations, you will probably end up hindering yourself. And this is something that I realized. Now I'm going to give you guys this example, yeah. And there's males and females in this, I can see. So looking for a partner in real life, yeah. If you're too specific, are you ever going to find what you want?
Bro, I was literally just
Less
talking to my
likely.
boy about this today as well. Yeah, 100%.
You won't. If you're
Bro.
look if you're too some people are just too they need to have this that, and it's usually the people that are younger or they have no idea or never been in a relationship,
Yeah,
essentially, right?
100%.
Do you see my point? It's people that, they're, let's say they're rookies in that type of thing, yeah, and they want, whether it's male or female, they want the looks, the personality. They need to have this job. They need to be this person. They need to be this tall or this weight or whatever it is. There's just too many things to consider. And the thing is, if you're too specific on what you want, not just this, with anything in life, what are the chances you're gonna find it? Low, isn't it? Now in trading, you can't. This is the problem with it in trading. You don't find a lot of trades, right? There is gonna be a time where you just get fed up and try to force a trade. Do you see my point? And that comes with being um, over complicating your entry model. It's like this. So when I was first learning these concepts that I'm now teaching you guys, I was trying to implement everything. I was trying to get, okay, I need a higher time frame area, and then I need like 3 standard deviations of the CBDR. I need it to run Asian range, and then I need it OTE into a specific array. What are the chances of me getting that?
Low.
It's very low because it's too specific. Do you see my point? It's way
Yeah.
too specific. And this is the problem with newer traders, right? And so how many of you came from a retail background from trading?
Me? Or
No,
just
no,
the
no,
thought
no.
of the best thing ever.
Yeah, JS is going to be the best guy to tell you all about it,
Yeah.
innit? um, so me, I was a retail trader. I think 3 years ago, I was retail trading, and so retail traders, a lot of them like to fall back on a trend line, support, resistance, and there will be a use of a few indicators, right? And what they'll wait for is this, yeah. Everything needs to line up for you to execute the trade. Do you see my point? But the thing is, when like the time that those things line up all together, usually the trade is gone, or the trade will only come once in a blue moon, right? Now, in saying this, it could be true that, oh, but if I only wait for this very specific trade once, whenever it comes, my chances of winning are this. But you see, in trading, it doesn't matter. The reason is we have a risk to reward ratio. Now, this is the thing. You need to be able to digest a loss well, whilst not being too specific on the entry model or the entry confirmations that you're looking for. Because yes, when you numb down the confirmations that you're looking for, you could incur a bit more losers. But this is also debatable because it depends on the confirmations you look for. Do you see my point? You see, I don't know how many of you remember, but I sent something like a snippet of the document that I'm typing up for you guys, and it was about trying to implement everything. Do you guys remember when I sent that? I think it's in the Telegram chat. I'll try pin it for you guys after. Essentially, it was me explaining myself, yeah, when I was like a newer trader, and I was like, I was so focused on, like when you learn something cool. Because the thing is, there's some stuff which is just fundamentally you've got to consider. Liquidity, imbalances, right? And time, whether it's time of day or day of week. And then you have tools to supplement that. Do you see my point? Now, when you learn the use of these cool like little tools like the CBDR and Asian range and specific like quirky cool things, what we tend to do as newer traders, we shift the focus to that because it's cool. Or if I can hit a trade with this, or like it's just it's just better than a normal trade. But it's a fallacy because it's whatever works for the trade, right? Now, when that happens, you usually throw the fundamental stuff out the window. When I mean fundamental, I don't mean fundamental analysis. I mean the fundamentals, like considering your liquidity pool, your simple higher time frame PD array, your level of your imbalances and the moves away from it. It's when you start to focus too much on the quirky things, you will start to see yourself slip up. I think is Charlie in here, CMC in here? No, he's not. So I know he wouldn't mind using him as an example because he's doing better now, right? He was with me for a lot of months, right? And I think Alex is in here. Alex will probably know what I mean, right? Yeah, I think he is working actually. So this was what happened with Charlie, right? So he's been with me from the start. Now, you see, when I taught him just chapter 1 and 2, he was doing, he was making good use of it and he was understanding liquidity. He was using a simple high time frame PD array to another high time frame PD array and trading the distance in between. Simple stuff. And that is fundamental. That's the fundamental stuff. PD array to PD array, right? And then you can add, you can supplement more tools in there to kind of refine your entry. Then what happened was this chapter 3, when I taught chapter 3, right? Because you see, you guys are new and the lessons weren't all out in one go. I was uploading content, one video a week, right? Now you guys have all the videos. But essentially, when I start uploading chapter 3 and I start teaching, the CBDR, the Asian range, on the weekly commentaries, now we're considering, the use of like the lower time frames and whatnot. His, his methodology to trading, his checklist, it kind of strayed away from the fundamental stuff, right? It strayed away from what is actually important and what's fundamental. And he started focusing too much on low time frame, working around the CBDR, the Asian range and whatnot. And he wasn't really referencing the high time frame as much. And now, a few weeks ago, I spoke to him again. He's like, you know what it is? I came to the realization, bro, it's literally all higher time frame work. And this stuff is just it's like a gym supplement. In the gym, right? How many people go to the gym?
I do.
Yeah, so like when you go to the gym, like your supplements like creatine, protein powder, whatever it is that you use, it's a supplement. It's not something you rely on, isn't it? It's just there to help you if you need it. Do you see my point? Maybe to meet your protein macros or whatever it is, right? It's the same with trading, right? The CBDR and the use of Asian range is literally just a measure or protraction from the midnight price. The midnight price is a fundamental thing. That's the first thing we consider when we're measuring a protraction for a bearish or bullish day. Now, the level of protraction above or beneath midnight price, that's when we use the CBDR and the Asian range to kind of measure the protractionary move, isn't it? Do you not get what I'm saying?
Sorry to kind of butt in, but this is a bit of a kind of booky question. But what is CBD? I haven't like covered that yet. You get it?
Oh,
And,
okay. So just in a nutshell, CBDR is called central bank dealers range. Now the time is from 2 to 8 p.m. New York time. The reason it's the central bank dealers range is you see at around this time of the day there is a lot of so there is kind of a fix in price of the orders, right? And we know when this occurs when it's consolidated. It needs to consolidate at this time. If it doesn't, then we don't consider it, right? Now, there's going to be a timeline that I show you, and the timeline specifically shows these times, right? Like going from 2 to around midnight. It's just it's a generation of liquidity, right? And now we can use that to project where the market is going to go and expand to. That's it. It's a measure of protraction. It's a tool to show you on a bullish day how low can price go before going to the upside. Vice versa for a bearish day. Yeah, but the specific parameters it can work in, and what it is people try to use this every single day. Now you see everything that I've taught you guys on the intraday level. Chapter 3 is only applicable, yeah. Well, most of the things are only applicable in the correct context. Try using that stuff in a consolidation, and it's a headache, right? Trading in a consolidation in general is a headache. You don't, I say avoid it because it's a less probable condition of the market. If you take a high probability trade in a low probability condition, they kind of, cancel each other out to an extent. You need the high probability, high time frame narrative is the first thing you need. That is what's going to enable your low time frame, intraday work to be a high probability. So when you move, let's give a clear example. Chapter 4, lesson 1 is the easiest example I can give to you guys. That lesson is the best lesson probably for the higher time frame stuff because it shows what you need for the higher time frames for your lower time frame stuff to be easy, right? You need a clear draw on liquidity. This is the thing, right? Then all you're doing is this. Once you know where the draw on liquidity is after displacing away from a PD array, you're hunting, right, a small retracement back up for a bearish example, and then you're waiting for price to show the willingness to go lower, and you're getting in line with the move lower. And you're constantly doing that until you meet an opposing PD array and finally the draw on liquidity. But you see what people do is this. They forget the high time frame stuff when they come to the low time frame stuff, right? Now, you see, I chat to people a lot. Not you guys. You guys, the lesson I was referring to then was chapter 4 and lesson 1. It's the intraday model stuff. I speak to a lot of people, not just you guys in the mentorship, but people from the free channel and just people in general. And it's very easy to see, who can make sense of a chart because a lot of people, for whatever reason, is this: they completely set their time frames in stone. When I hear someone say that the hour is the higher time frame, it kind of makes me cringe a little bit because the thing is you're not working inside of an hour, you're working inside of the day. Do you see my point? The hourly candles are pointing towards where the daily candle's going. If you know where the daily candle's going to go,
start the day with a coffee.
if you know where the daily is going, because the daily, right, it moves way slower than the hourly time frame. That's number one. So if you know where the daily is going to draw for, because the hourly candle, you can have one hourly candle opposing the daily candle's actual move. For example, the first hour of the New York session could be a retracement, right? Now, if you're taking your bias from an hourly candle, which I don't recommend, but people do this for whatever reason, you're going to be caught offside a lot of times. And the thing is, if you're using a 1 hour as your high time frame, what will you be using as a low time frame entry? A 1 minute? It's not a good thing to do. Remember, the fundamental stuff is this: stay on the higher time frames. You know what it is, yeah? You can have great success using just a daily, a 4 hour, and a 15, regardless of even the 5 minute, right? But the thing is, a lot of people just don't have the, what's it called? The patience. They can't exercise the patience to get in line and wait for the 15-minute candles closes. For whatever reason it is, right? If you just stick to like a 15-minute with the 4 hour and the daily, you can catch, an easy OTE. Because a lot of the times is this, yeah, you'll realize, and I don't know how many of you guys went through this, yeah, you'll try and catch the minute, 2 minute, 3 minute trades. But you see, if you just look at the 15 to 5 minute chart, it was so much more easier, right? And it's not Is there a chart streaming? I'm not too sure what you mean by that.
No, it means if you got a chart on the screen.
No, there isn't.
Oh no, there isn't. But the thing is this is the crux of the Zoom that we're talking about. When you're overcomplicating things, well, now I ask guys a lot of the time, yeah, because a lot of people have the content, and when they finish it, I say develop a trade plan. And when they show me their trade plan, it's very large. And the thing is this, your trade plan needs to be small. It needs to be small for you to understand it. It's not meant for me to read it and understand it. Someone showed me their trade plan and it was only like half an A4 bullet points. But even that, he could have condensed it into maybe like an A5, A6 piece of paper. And that's how it needs to be, because the thing is this, yeah, your confirmations need to be effective. There's not going to be a lot of them. There's no point in putting less, like a higher volume of less ineffective confirmations. You're better off just doing, you know, 2 or 3 like highly probable and effective confirmations. Do you see my point?
Mm.
What's your confirmation that you guys are looking for right now?
You're talking about like in general.
In
Just
general, like
you know,
if you're whoever is like demo trading or whatever it is, right? What's the confirmations you're looking for like to participate in a trade? Like this and this needs to happen for me to even think of participating.
high time frame.
HTF array.
Okay, so one of you go on, one of you.
So in high time frame PD array traded
Yep.
into, so then that's like 4 hour or
Okay.
above, and then
Yeah.
wait for market structure shift, and then
Yeah.
the displacement after, and then OTE.
Okay. And do you know why I say OTE is the most effective? I'll tell you why. Yeah. You know, when I was trading and I was an order block boy, innit? Before I realized the importance of the other arrays, I was just an order block boy, and I would only wait for the order block because my understanding of the other arrays were poor. Do you see my point? I wasn't comfortable trading off of them. So you know, out of all the PD arrays, what, there's 6, yeah? If you limit yourself to just one PD array, you see how you're just limiting yourself to 1 of 6 trades. Do you see my point?
Yeah,
That's why I say, yeah, you have to be comfortable using all the PD arrays, because every single one of them have their place, isn't it? Now, in saying that, there's going to be a few PD arrays you just don't like, and that's fine. But I'm saying be comfortable with most of them. And this is the reason why OTE is very good, because it's not an array. It's a range. It's a part of the price range, isn't it? And it considers all arrays, because whatever array is inside of there, you're going to take it because it's optimal trade entry area, isn't it?
Yeah,
You see
that's
my
what
point?
I do.
It hits
Yeah.
all the nails on the head, and it removes so much like you know, being like iffy to take the trade, because a lot of times maybe like, no, but I'm waiting for the fair value, I'm waiting for the order block. The thing is this, yeah, in a trade, arguably the most important thing to consider is a stop loss placement. Because the thing is this, yeah, a lot of people try to do what? They try to place their stop loss using the idea of, I'm placing my stop loss here to minimize the risk on the trade. But the thing is, they need to first consider the safety of the stop loss, because the stop loss is not there to reduce your risk. It's there for the safety of the trader, isn't it? Right. Now let's say whether it's you like the order block or whether you like the fair value gap, right? Whichever one it is that you like. Let's say you enter at the fair value gap. Put your stop loss above the order block. If you're in 2 minds of which array to take, just place your stop loss which would invalidate both of them, because the risk on the trade is going to be the same. You're risking that fixed percentage. You're not risking it on terms of your lot size and your pips. It's that fixed percentage. Now, of course, if you enter on the array earlier, you're going to have to reduce the actual lot size to even it out to be 1%. Regardless, it's 1%. You see the point I'm making, right?
Yeah.
So whether or not that stop loss, which nullifies both possible trade setups you could have taken, both would have hit stop loss anyway. Do you see my point? So there's no reason yet to be so like try and pinpoint and whatnot. That's one thing. And another thing is this, yeah. A lot of people, they try to what's it called? They try to place their stop loss in areas that, you know, not above highs, but you see your stop loss on a 1 minute. People trail it on like a 1 or 2 minute. I say if you want to trail your stop here, do it after every 5-minute candle. Every single 1 minute candle, you have to realize that the 1 minute is very deceiving to time passing. You see when you're seeing like the minute candles print, you're kind of distorted to like how much time's actually passing in real life. You think that you've been in the trade way longer than you have, and you think that the trade's going to come to an end way before it's actually going to come to an end, just because of the fact that there's candles printing at a faster rate. Do you see my point? Look at the 5-minute chart, because you see a lot of times when you're trading your 1-minute stop loss, it's inside of like 5-minute fair value gaps. The rule of thumb is this, yeah. Your stop loss either goes above a high or beneath a low, which if it trades above the high and you're short, you shouldn't be in the trade, innit? Or if there is a level that's already rebalanced underneath the low, then place your stop loss there, because it shouldn't trade back into an area that's rebalanced. Do you see my point?
Yeah.
Yeah. Anyone got any questions about like so like CBDR and stuff, yeah? Who uses that as like it has to be like this deviation or whatever?
What's CBDR?
Oh, it's touched on chapter 3. It's a measure of protraction. So it's like it's like basically when to measure the retracement ending before the move's going to continue for the day. But a lot of people, they get too reliant on it. They try to say, no, if it's not going to go at least to 2 standard deviations of it, I'm not going to entertain the trade. And what happens is they miss the trade. And also is this, a lot of people believe that the market structure shift is only an entry model. It's not just an entry model. It's a signature and price. It can be an entry model, don't get me wrong, but that tells you that your draw on liquidity is now on the table for you to try get in line with. You missed the first entry for the market structure shift. Until your draw on liquidity is hit, every retracement until then is a viable entry. But a lot of people just think that you miss that first shot and you're not able to get capitalize on the trade. That's not true. Remember, it's the distance from the market structure shift to your intraday drawn liquidity, which is the area for you to try and find a trade setup.
Only asking because Pranav is buying coffee, so we buy it now or later. That's fine.
Yeah, it's for
Bro, I got a
the
question
Judas for
after I
London.
finish.
Yeah, you go on.
It's not technical, but it's more of like psychological, isn't it? When you lose like 3 or 4 trades in a row and you're like down, and
Yeah.
you sometimes obviously think about like the plan that you have and stuff. What sort of things that you can do to obviously just know that this is a plan and you just have to go by it and just wait for the right moment?
On a demo account or a live account?
No, demo. I
Okay,
haven't
cool.
got to live yet.
Okay, this is good. So you see when you're on a demo, this is where you're making the trade plan. You see, how many of you went to university, or you done the UCAS?
I'm going now, innit?
Or how many of you done the UCAS personal statement? None of you.
Yeah, I've done it.
So when you do your personal statement, yeah, how many do you just submit the first draft that you done?
Like bears.
If you don't want to get in, then yeah.
Yeah, if you don't want to get in, you just submit the first one, right? But what you do is that you take it, you give it to someone more knowledgeable than you, that's probably in a place where you want to be, right? And you see, is it good? What can I do more? That's when you can lean to me for your trade plan. But it's also this, innit? On the demo account, you're just refining your trade plan, seeing what works, what doesn't work for you, given that you're executing your trade plan. Because you know what some people do? They have a solid trade plan, but the person, like you executing it, you're the problem. It's not the trade plan. Do you see my point? Some people enter early, some people just FOMO, some people, like, a loss is completely normal. But what happens is people take a loss there or 2 losses, and then they see that, oh, my trade plan is not working, whatever. But the thing is, those losses are needed for you to start refining yourself. Do you see my point? I say this, yeah, every single time you have a trade plan, run with it for at least a month, see how it does, and make sure you're only considering the actual trades you've executed on the trade plan. Because it's like this, yeah, you can take it's like this, yeah. Let's say you take a trade plan with everything inside of it. Let's say you consider every aspect of trading inside the trade plan. Now, over time, you're going to keep refining it, and you're going to start removing all this bullshit that don't work. And you're going to come out with something that's very simple that works for you and you like it. It's that refinement process that makes the trade plan right. You're not going to get the best trade plan from the get-go, right? Copying someone else's trade plan doesn't do well. If you want to link it back to the UCAS, you'll just be, disqualified. You can't copy it, right? Plagiarism. It doesn't do any good because you see the way that person refined it is set to their style, the time of day that they like to trade, the parameters they like to trade in, what they're mentally comfortable with trading, whatever. Do you see my point?
Yeah, I got it.
Yeah. Anyone else got any questions?
Can you speak a bit on open, high, low, close?
Yeah, what do you want to talk? What do you want to touch on about it? Let's get to a chart if we're going to do that. So let's go open, high, low, close here, because is K and are you in the call, bro? Let me check.
But hang on, did you just say you're pulling up a chart because your video's off,
Oh yeah. I need to share screen on that. Now you lot can see
I
it,
got
right?
another question here after you finish with that. Yeah.
All right, cool, sweet. So you see today we're moving on up with the GDP, yeah. And this was the day, I think I said it in the free channel as well. I'm expecting to move back up into the range now because we have these highs. There's these what do I call these highs? Flat, yeah. These are flat highs. Yeah. Those are highs where those are my targets. Over this one, this is like a target if we're moving up, right? Now, moving up with the GDP, right? We took out a previous day's low. I think this was the run on the previous day's low here, right? This is happening inside of London, and then we move higher. Now, when we moved higher, we have this fair value gap, right? You all can see my screen.
Yeah.
Yeah, cool. We have this fair value gap here. Now, when we see this with the open, high, low, close, given our narrative is this year, we see a candle trade down lower into it, right? Fair value gap with the order block. Then we move away from it. This, right, when you see this, you're now not expecting the low of this candle to get violated because of what is done in the context of what is done. Do you see my point?
Yeah.
Right. Expecting a move back into the range. There was a fair value gap. We cleared sell side liquidity under this low, right? Come into the fair value gap with the order block, and we moved away lower. Now the candle's low, we don't anticipate the candle's low to get taken. So what can you do now? You can anticipate, the next candles to print up higher. Just using this methodology, if you want to do this. Let's say this is a 4-hour or 1-hour candle. You could do something like this, yeah. You could box this whole candle, something like this, because now you're not expecting this area to get traded beneath. So what you could do is this, and what I'm going to say is a lot higher level, and a lot of you guys in the, here may not understand what I'm going to say, but a lot of you guys have been with me for some time will understand. Think of this now as a Judas swing. See this as a new candle, like just a new daily candle, whatever it is. You're not expecting this to get, taken out, but you want a protraction into this candle's, range before going higher, because now you're expecting the low of this candle to stay intact and buy side liquidity to be taken. Do you see my point? That's all there is to open, high, low, close. The open, high, low, close only makes sense though when it's offered, like when it's viable. You can't use like open, high, low, close here. There's not enough confirmation here, right? Once you see that there is a willingness to start printing higher prices, then look for the candle, right? Look for the candle where price should not exceed this candle's low or high, given what that candle done. So usually I like to use candles that rebalanced fair value gaps. Simple, isn't it?
Wait. You can even use it for the example. You see that like that candle that rebalanced the imbalance, like lower.
Yeah.
Yeah, here. Can you use it for there as well?
Yeah,
like
you could use
it's filled it up and then till it reaches the high.
yeah,
like
you could, yeah, but do you know what it is? Yeah, personally, I wouldn't have used that one. Do you know why? Because from here, there's no confirmation that we're gonna start offering high.
Okay,
Do you see my point, right?
Yeah.
From this chart above, we taken a high, we came back into an imbalance. Now, when we take a high, right, this is the thing that people don't understand. Even though this is a bullish narrative, you see the buy stops above here, they're still going to be paired with short positions. People close it, like the trades, like long orders being fulfilled above there, because there's the sell orders being fulfilled above there, right? Because there's still buy stops there. Now those sell orders doesn't mean it's going to create a reversal, right? but it's gonna go back and likely to go back into the range. That's why after a break of a high or a low, you're expecting a retracement. You never want to buy above the high. Once you see a high, buy or a low broken, anticipate the retracement. If a high is broken and there's a fair value gap here and it's OTE, this is optimal trade entry. Do you get my point?
Yeah.
So
Yeah.
I'll say it again, yeah. Once a high is broken, like in a bullish context, you're not looking to get long until the retracement's offered, right? Because you're never buying above a high. In chapter 3, lesson 1, there's 2 rules I say that you don't do. What does anyone know what they are? If you watched it, you don't buy above highs and you don't sell beneath lows, right? If you're above a high in a bullish context, you have to wait for the retracement lower. Now, if there's a fair value gap there and it's OTE from the low to the high that took out this high, this is the ones that I consider, right? Now, let's talk about something that happened in the chat today, and I sent a VN to it in the Telegram chat all the time. You see a lot of people, a lot of the time, they go for the full closure of the fair value gap to enter, isn't it? That's a very common thing to do. Or some people just like, you see like the wick of this order block here. You know when people ask me, oh, can I take the wick or can I take the body to enter? You see like this small wick here, right? What is the difference from you entering on this wick or entering on the body?
A pip.
And is it in any way significant? It's not.
No.
It's not gonna add nothing. It's really not gonna. You might have to reduce one micro lot on your thingy, on your MT4. Maybe that's about it, right? Now imagine you're trying to get the body. Some people even only go for the 50%, right? But imagine you're trying to go for the body and only this wick is touched because it's relatively small to the body, right? You're gonna miss a trade for what? You're gonna miss a trade for 1 pip that could have been, you know, a 3R trade. Do you see my point? Drawdown is not the problem. Stop loss is the problem. Do you see my point? Don't be afraid of drawdown. If your stop loss is safe, right? Because regardless, let's say here, yeah, if I entered on the wick of here, the body, or even the midpoint, where's my stop loss gonna go?
Below the low.
The low, innit? It's gonna go the low, regardless of where I entered, isn't it? So if I entered at the 50% or I got the bear entry at the body, regardless if it goes stop loss, it's gonna go stop loss and take me out if I entered, you know, anywhere within that candle. Do you see my point? That's the one thing that people don't understand, and you know, so it causes a lot of people to miss trades because they try to get the full closure or they try to get the 79% of the OTE or, you know, the 50% of an order block. But the thing is this, yeah, when you know where price is likely to reprice to, just get in with a safe stop.
Well,
You're
my
not trying-
question is like in line
go
with that.
Yeah, go on.
So you know when you're trading in a lower time frame, like 15 minutes or 5 minutes, do you, with the news event, if you do have one, do you wait for the candles to finish, or you could just because I've tried it with
always wait for the candles to finish. Always wait for the candles to
Okay.
finish, right?
No, that's something I have obviously experienced in past a few trades that I've taken. Like I would take it while the candle was running, and then my bias and everything was correct. The trade would actually work out the way I wanted it to, but the candle that was actually going on, I would take the trade while it's running without even being finished. So that same candle would just go stop me and then go back the way I wanted it to.
So you
that's
see
something
that.
I wanted to clear out.
So you see this candle, yeah. You see now we have
Yeah.
that. We have the use of hindsight to see this candle did reject.
Yeah.
But you see this candle, yeah. Let's say it's a 1 hour chart. You see with 10 minutes left of the candle, it can be here,
Mhm.
and
Yeah.
within the 10 minutes, bro, it could go down here. Do you see
Yeah,
my point?
that was like my last trade that I've taken. Obviously, it was on the demo, but
Yeah.
like that, my bias and everything was correct. Everything went the way I wanted it to, but it was just like a few minutes left on the trade, and it just went against me and stopped me. And then I'm like, maybe I'm doing something wrong. So I was gonna ask you.
Always,
I didn't get time, so
I think we touched on this Zoom yesterday as well. Always let the candle close, because then you're going to see if it's an astral rejection. Do you see my point?
Yeah. No, I
One thing
understand
now
that.
that you see in the Telegram as well.
I'm not very active on the Telegram, so just like
all right.
union work and stuff.
I'll touch on it as well. So you see in the Telegram today, like last hour, yeah, I pinned a voice note, isn't it? There was a voice note I pinned.
I haven't actually checked.
So this was what the voice note was saying. You see, It's about the risk to rewards on a trade. Yeah. Now I'm gonna give you two examples, and they're the same thing, right? You had a 3R trade, right? Let's say you had a trade and the take profit was 3R, yeah, and you have a trade which is 6R. The same exact trade. It's the same trade, but one of the take profits of one trader is a 3R, and the next trader is going for a 6R trade, right? Now it hits 3R. It goes to 4R, right? Now who's out of the trade and who's in the trade?
3R.
The 3R guy's out of the trade, innit? Take profit hit, yeah? Now who's in the trade?
The one with 6R.
6R, cool. Now let's say it retraces back here and it goes to 3R. Yeah, it goes to 3R. Now the 3R guy's already gone. He's gone about his day, finished already. That 6R guy, let's say he sees that it's reversing on me from the 4R point, it's reversing me now. It's gonna offer me 3R. He closes out a 3R. Now you see the point here. They both have taken 3R. Yeah.
Yeah, just extra bit of chaos, isn't it?
Yeah, but listen to this point. This is the next point I'm going to say is important. They're both taking 3R. Yeah, this is the point you need to realize. They both taken 3R, but one guy had his take profit already initially set at the 3R. One guy was aiming for more, and he had to manually cut it for the 3R. Yeah. Now, in saying that, how do you think who feels more accomplished? Do you think
3R, obviously the first one, because
the first guy, because he hit his target? Now you see. And I'm talking from experience here. You see the 6R guy that got half of the actual reward that he was going to get, even though it was the same level, in comparison to his target that he was going for, he had to actually settle for less. Now, what do you think he's likely to go do? Go and hunt the rest of the...
question is obviously like,
he's gonna go
wouldn't that make you question your setup? Like, am I doing it correctly?
Not only, it's not that per se, but it's gonna make him go and try and find the other remaining 3R, or he's gonna feel unsatisfied. And when you feel like that, you're gonna go and try and find another trade to make up for it. Trust me, I was used to be a victim of this. Yeah,
these things like are very simple, but it plays with your mind a lot. That's something I've realized in the past few weeks of me trading. It's just like sometimes you know that it will go there maybe in the next few days, but you think that you would go on the same day that you're doing the trade, but it doesn't, and then you just get left with like nothing. Even though you win some, but you still think, oh, what have I done wrong, or I'm not satisfied.
You focus. You focus too much on what went wrong.
I mean, that's probably like because we're new to it and rookie. That's probably why. But that's something I've realized as well.
You see, the feeling of hitting a take profit is very accomplishing, and it's very like it's very rewarding to the trader. You see, when you hit a take profit, you actually feel like you're done for the day when your take profit hits. When you manually close a trade, you don't feel like your day is done because you had to manually intervene to close the trade. Do you see the point I'm trying to make? Now, that's what I'm saying. You see, ICT calls it this: go for the low hanging fruit. You see, if you're going to go pick a fruit off a tree, which one are you going to go for?
Because the one you can reach to.
The one that you can, the closest one that you can reach to. Yeah. And the closest one that you reach to, even though the one at the top may be like so nice, is it worth the risk of you trying to go to the top of the tree, getting the fruit that's a little bit better, but both of them are still gonna, satisfy your tummy, right? Go for the low hanging fruit, because the thing is this: the last thing you want is the trade reversing on you and you manually have to close. And another thing is this: that trade, where I said, it reversed to 3R and you cut it. More likely than not in that scenario, the trade reversed to break even or stop loss to take the trader out, because they believe that no, it can go back up into my take profit. I'll close at 4 or 5 or, but it doesn't come. Do you see my point? Make sure your take profits are in areas where they are likely to get smashed. Like, price should definitely trade here. If it doesn't trade here, then I'm just wrong. Like, my draw on liquidity today was just off, right? Because the thing is this here, it goes back to the fact where I was saying 2R adds up.
Definitely.
How many trades you can go for? You can go for 8R trade. Don't get me wrong, those things, they'll come in it. But you see, when you just I saw a analogy. It was to do with the baseball player. They just hit the ball a few times. They hit the ball a few times. They're not trying to go for like a home run, and the home run just comes. You see, you'll enter a trade, and you'll just see that the candles will stop printing in your way. Like, there is a lot of time left in the day in terms of the kill zone, but the candles are just printing in your favor like crazy, that's when you know you've hit a home run. But even with the home run, understand that it's going to come to an end, and you need to know where you're going to get out of the trade. A 5R day is amazing. You see these guys posting, 5R is normal to me, or like 5R isn't even good. Some people say that. Put it into perspective for you guys there. Look at what you need to pass challenges or funded. If 5R is nothing to them, they should literally be funded within 2 days. But it's not realistic. Do you see my point? You need to have your take profit levels in places where they're going to get smashed. Now, inversely, your stop loss goes where? Places where what shouldn't happen.
Where would it invalidate the trade?
Where price shouldn't go. Now, let me put it into this perspective, because the whole topic of this, this Zoom was what? Over confirmation, That was the topic of the Zoom, isn't it?
Yeah.
So if we just say this, you can find a trade setup inside of, understand the high time frames or whatever. I'm talking the absolute low time frame entry model. You just need to find a low time frame entry model that allows you to get in line with the price, with a safe stop loss where price shouldn't trade to, and a take profit that gets smashed. That, in my opinion, trumps all of the other confirmations out there that you can use to complicate yourself. Is it not?
Can you say that again, please?
So the topic of the Zoom was this: does over confirmation kill your trading? To an extent, yes, it does, because it's going to make you miss a lot of trades. Now, this is what I say: the only confirmations you need is this. You need to just understand where you are on the high time frame. I'm not assuming the high time frames off, because that's a long discussion. Your high time frames and everything is printing towards your bias. All you need to do on the low time frame now is get in line with the high time frame move. So all you need to do is this: find an area and price that you can offer a retracement to. When it's offered there, find a suitable stop loss that should not get traded to, given your bias, and find a take profit which should definitely get traded to. If you can do that, exclude all the other unnecessary confirmations you need, there's no reason why you shouldn't have more success in trading, because that removes it.
One more question here.
One sec. A safe stop loss, right? A safe stop loss and a content TP that is going to be more likely than not hit removes a lot of problems in trading. It's just, as traders, we try to milk every trade. Do you see the point? We try to reduce the stop loss. I know, guys, and I used to even do this like years ago. I'll enter on this order block here, and my stop loss would be at the 50%. I'd make that mistake, and the reason is because I'm trying to get the craziest risk to reward out of it, but I'll take so many losses that the losses, even though I could have one high risk to reward trade to bring it back. You see how I feel after those losses? I'm just gonna start throwing. I'm just gonna swing for the fence, innit? And I'm gonna put so much size on that next trade, and I lose it, and I'm blown. That's the main problem with high risk to reward. On paper, it's cool, but practicality, how it's gonna make you feel taking a lot of losses with those tight stop losses. It doesn't feel well, and it usually ends in you slipping up, trading in a way you shouldn't trade, revenge trade, FOMO, whatnot, over leverage, and that then ruins you. It's not the technicals that ruin you, because if you use sound risk management, it's very hard to blow the account. Use 0.5% risk, trade however you want to trade, and try blow the account. Even this, use 0.5% risk, flip a coin, heads or tails, go long or short, whatever it is, with 0.5% risk only, try and blow your account. On a demo account, try and blow it. You'll struggle. Blowing an account doesn't come from the technicals. It doesn't come from you as a trader not understanding technicals. It comes from the person that's trading over leveraging in areas they shouldn't over leverage and whatnot. What was the question as well, bro?
No, you've covered it, but when I was just asking that, when you talk about the over thing confirmation, what were you referring to?
The what do you say, bro?
Over confirmation.
The over confirmation. Okay, I'll give you a clear example. Yeah, you see the equivalent of our style of trading to retail. Let's make a link in it to the retail world.
Mm-hmm.
You see what is it? Let's say their indicators need to line up for them. RSI oversold and EMA crossover and whatever. Yeah, that's what they look for, confirmation. Now that's the equivalent of us saying this: the CBDR needs to be 2 standard deviations. I need to see an optimal trade entry into an order block only, otherwise I'm not going to enter the trade. Over specifying what you're looking for. Do you see my point?
Understand. No, it makes sense to me. But you did obviously answer most of it, what you were answering the last question.
All right, sweet. You
But
see,
bro, but last thing I want to say, yeah, before obviously, because I'm at work, so I just came on a break to go, and I don't get to attend much of this. When I joined
on
the group chat, yeah,
that.
of the Telegram mentorship, yeah, I didn't know a bit about trading, yeah. But alhamdulillah, in the last 4 months, I went through like all the contents that you have noted down. But I think I'm in a better place now. I'm understanding the whole market and stuff. But I've still got a lot to do and learn, yeah.
Good to hear, man.
But like I'm saying, it's
You
amazing.
see
man.
that the
Mashallah,
learning.
like,
You,
but we went to school, yeah. But like
Yeah.
I've never
yeah,
realized.
by the way, I went to school with this. I went to school with this guy, by the way.
Like I've never expected like this to happen, but mashallah, like Allah Mubarak,
Jazakallah,
like
bro.
you've done a lot.
I appreciate it.
But I'm
Appreciate it,
really
bro.
like I'm grateful as well. But like the way you're helping people is amazing, man. Mashallah, like you're laying a blueprint for other people.
Trust me.
It's
Jazakallah, bro.
amazing, bro.
I appreciate it, man.
Nah.
You see the thing is, yeah, and chapter 5 covers it. You see, I give you guys like what you need to focus on. I don't know how many of you watched that video, what you need to focus on right now, right? And in that video, I give you guys the different kind of places you are in your journey as a trader. Right now, you lot are the learner. You're not the applier right now, because it goes from the learner to the applier to the trader. Do you see my point? Right now, you're the learner. Now, learning the content, it's not hard. Learning is probably the easiest bit, but it takes a lot of time, right? You see, once you learn, yeah, you need to get comfortable applying it. This is where people kind of throw the towel in, right? This is where you need to like do things like journaling why it went wrong. This is where, things like, when you have all the content in front of you, have all your notes, you try to make a trade plan. Oh, I can include this, I can include this, I can include that. This is what I had, and I had no one to tell me it's wrong. But I'm telling you guys now, yeah, certain things in there in their mentorship are fundamentally you have to consider. Chapter 1 and chapter 2 are the pinnacle. You see, chapter 3, it doesn't make sense without chapter 1 and chapter 2. Forget chapter 4. Your intraday work does not even come, you can't even consider it if the high time frame is not in line. Do you see my point? And you need time frame, understanding the reference points to price, given the price arrays. Once those align, high time frame with a price, consider chapter 3 getting in line intraday. That's when you use New York, the London kills, the relationship between the London and the New York kills and continuations, or London into a New York reversal, depending on where you are on the PDRA matrix. That's how you need to consider it. Now, I know if we didn't have the Zoom, maybe you guys are considering, so I have to use the CBDR, I have to have the Asian range out. If it doesn't run the Asian range high, then it's not a trade. No, it's not like that. It's not like that. That's your confirmations of what you're thinking, but that doesn't mean it has to be like that. Now, of course, I recommend you have like one specific thing that you're looking for, because you don't want to just take any odd entry. But the main thing I'm saying is this: don't over specify and over complicate it, because you're going to miss so many trades doing it. Maybe you want a run on liquidity with something that could be your specific thing that you want. That's fine for it, right? Because you don't want to take every odd trade, every fair value gap. Every fair value gap needs context, like this, right? We had a low, there's a fair value gap that's clearly left here. You took a high, OTE, and you can take that trade off the fair value gap. But without this run of the high, I wouldn't consider that a fair value gap. But anyone else got any questions? I think
Bro, quick question.
Yeah.
Quick question. You see when the news happens, yeah?
Yeah.
Shit. You see when the news happens, how long do you wait after the news to like get in line?
So cool. This is a good question. So you see with the news, yeah, it depends what's the profile before the news. If we're consolidating, yeah, with up into the build up of a news event, I'm gonna wait till after. Now you can find a trade before the news event that the news event is gonna carry you. Do you see my point?
Yeah.
Like let's say 8:30 news event, yeah, at 8 a.m. New York time, so 1 o'clock our time, we find a trade, we find an optimal trade entry like this fair value gap, right?
Yeah.
15-minute candle. Then this candle is a news candle, and it just blows up and takes us there. But that's already because of what price done prior to the news event. Do you see my point?
Yeah.
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 Now,
yeah.
Now let's say this was consolidating and choppy. I'll probably try and hunt a power of 3. Power of 3 is usually my go-to thing that I look for, by the way, because power of 3 is in every single model that you can try. In a market maker sell model, there's a power of 3, by the way. You see when you reaccumulation area, that you trace down and then you get that dip down into the fair value gap, and then you move away.
Yeah.
Like that's a power three. Power three is just, it's like a movement in price essentially. You can use a power. I like to use a power three usually for the news events if it's consolidating beforehand, innit?
Yeah. So you see, let's say
But
the-
to answer your question specifically, yeah, the actual
Yeah.
time I'll look for after the news event, if it's consolidating, wait like half an hour, bro. Because I'll tell you why, yeah. You see the news events, bro, they're not random times. If you haven't realized already, yeah, you know how much emphasis we give to the Forex Factory calendar because it's so important. This is your reference to time. Do you see my point? And a lot of people, bro, they don't realize this. A lot of people don't even know why the candles are starting to print bare big because they don't understand that there's a news event playing out right now. Do you see my point? Now,
Yeah.
if it's consolidated before, you see the news events are usually like 8:30, which is 1:30 our time, innit?
Mm.
Wait like half an hour, 15 to half an hour after. It will clear up. Because you're gonna get those wiki candles after, innit? Do you see my point?
Yeah. Okay. Okay, that makes sense. So let's say, because sometimes like let's say there's like a power three at play, so there's the accumulation and you see the manipulation. Sometimes let's say the manipulation goes all the way and hits like a fair value gap or something, and then it just turns wicky. So it let's say the bias is bullish, so it hits the fair value gap and then it goes all the way back up. Like, do you wait do you wait for for it to make like an OTE, like another 15 minutes or something? Like, if you know what I'm trying to say. Like, let's say for example, like you're not able to enter because it just moved a bit quick because of the news. What would you do in that situation? Yo. Oh shit.
Oh, it's gone.
You got booted on live.
Mad.
Oh, he got muted.
Someone send him a link.
Wait, can you all hear me?
He's back now. He's back now.
Yeah.
Bro, I don't even know what happened. I think my internet cut out. Can you all see my screen?
No.
Oh shit, my bad. My bad. Sorry about that. I was thinking, you know what it was? Your voice here was starting to become like, when it goes robotic when it's lagging.
Okay.
And I thought it's maybe your internet, but I didn't want to say nothing.
No, it probably is. I don't even know. Man.
Nah, it was mine.
What?
It was mine. It's clear now. I connected to a different internet in my house and it got carry on, bro. Sorry about that.
Yeah. So like
Sorry,
I said, bro. Yes. Like I said, you see, let's say it's accumulating, and then the news event happens, and it hits your let's say a fair value gap. Let's say your bias is bullish, and it hits a fair value gap on the OT, and then it turns all wicky, like it goes the opposite way, and it turns into a bull with a mad wick that hit the fair value gap. What would you do in that situation? Would you just continue to wait until trade, because that kind of shit frustrates me, innit? Like,
Oh, so like you're saying, let's say if this was a news event and this was the actual news event dropped like 10 a.m.
Yeah.
Yeah, this candle right here is the one that dropped
exactly like that. Yeah.
You see, in that, sometimes it's not even a trade entry. It's a thing where you're right, but you couldn't get in line with it. That happens. That's nothing to get frustrated about. It's just sometimes the move is too quick for you to get in line with. You see, sometimes too much volatility is not good. It's hard to start. This comes from me. It's hard to stomach too much volatility. Do you see my point?
Yeah.
When it moves proper quick, it's very intimidating. Yeah. But you see, after the news event, usually, cool, this was a missed opportunity. But do you remember what I said, This, until your actual drawn liquidity is hit, you still have chances to get in line. So maybe, cool, you missed that chance. Wait for the move up and then see if there's going to be another creation of a fair value gap. And usually how it happens is this. You see, once you start running away, there's going to be candles which leave imbalance, like they're big candle bodies in it. You'll see the next opening of the candle comes in lower to close the imbalance. If you're assuming that this candle, right, the candle with the big imbalance should hold and the low shouldn't get taken, try get to 50% of that big candle that's running with the news. If you can, and put your stop loss at the low of that candle, the news candle.
Okay.
Yeah.
Yeah, that makes sense. Thanks, bro.
Sweet. Someone else had a question, innit?
Yeah, I got a question still. When it comes down to the importance of the midnight price, and let's say on a bullish day, the midnight price hasn't been run under yet.
Yeah.
It doesn't necessarily invalidate your trade for that day, because I try trading London open close on or sometimes, most of the time, to be honest. And then I normally put heavy importance on that and whether or not I bother even trying looking at the session?
Good question, yeah. You see, it depends on Asia as well. If Asia doesn't range, right? You know, if Asia trends,
Yeah.
then it throws these things off in it. So you know when Asia actually, let's say Asia takes liquidity. You know how you have a London to New York OTE?
Yeah.
You can have an Asia to a London OTE if Asia trends. Like Asia, let's say this was Asia, right? Let's say this was Asia. You see how it take out this low, yeah? This previous day's low, right? Let's say this was Asia. Clearly, this isn't trending. This is a move down. 1, 2, 3 candles Asia, yeah? And you see that displacement are way lower. You see then in London, 4 o'clock, it comes in from here to here, OTE. That's
Yeah.
something you can hunt if Asia trends. Like if Asia does something specific, like if Asia, right, does like a run on a level, like a liquidity pool, like a previous day's low high, or if it trends, like it moves, it trends and it rejects off of a PD array, then you can hunt the Asia to London OTE.
All right, I see what you mean. Because
Yeah.
today it did that. but
Yeah,
then
I
it
think
did
today
that.
was actually an Asia to London OTE on Euro USD.
Yeah, I was watching it. And it did that.
But with midnight price, yeah, you see, this is a thing where midnight price is still fundamental.
mate.
Who's this? Oh, crap. I thought you said you couldn't come.
No, I just came back from shopping, innit? So,
Ah, right. Cool. Well, I think we're gonna wrap it up in a bit, but this one's recorded as well, don't worry.
alright, cool.
What was I saying? Yeah, so midnight price there, you want to get beneath midnight price, preferably, given that Asia's a consolidation. Now, you know, sometimes the run beneath midnight price is so shallow, yeah? You see, the best buys come for London from underneath midnight. Well, you want to see that accumulation occur under the midnight price. Now, sometimes you don't get that, and it just starts running to your drawn liquidity. Like I said before, just find the next entry to get in line with it. If that doesn't happen at the midnight price, you missed the trade in London, cool. It didn't get to where it didn't trade how you wanted to trade underneath midnight opening price. But you can find the continuation in New York, given that, you know, there's still room to move to your high time frame PD array.
Yeah, that does clarify. Yeah.
Yeah.
Yeah, thanks.
Sweet. Any more questions, or we're just gonna wrap it up? And then who recorded it?
MF guy.
Yeah, MF. Yeah, if you know the recording, bro, if you can PM it to me on Telegram, then I'll just send it into the channel for everyone else. I appreciate that.
Wait,
Sweet.
I've got a question.
Go on.
You see what you're saying in like the other Zoom, how like use news events and we should
Yeah.
mark it out and all that. How far ahead would you like look? in
The
terms of,
next
like,
sig-
quotes
the
that
next next significant news event.
Okay.
And
Sorry,
you see the red folders, even though they're all red, some hold more significance than others. For example, Philly Fed Manufacturing Index is red, so is CPI, so is FOMC. They don't hold the same weight. You know, things that are GDP and inflationary news should be your main thing, right? So CPI, those type of things,
yeah.
which, you know, things that change, you know, can alter the stance of the Fed's stance on monetary policy. Those are the things you want to consider. Those are the news events, the ones that can change the tone or, you know, further solidify their stance on the interest rates they want to do. Like, I think there's a red folder. I forgot where it was. It was last week as well. It does nothing for their stance on the monetary policy. Do you see my point?
Yeah. All right, yeah, thank you.
Yeah, it's all good.
I got a quick question also. It's about setups. So for example now, say if your setup was like there during, let's say, end of like New York.
Yeah.
But it doesn't, for example, say if there's like an order block paired with a fair value gap, and that's where you're looking to take an entry.
Yeah.
But it doesn't get there during the New York session, but like say if it gets there, like,
there's a London close session is 10 to 12 New York time.
10 to 12 New York time?
Yeah.
Okay, so you can take the trade after then.
Yeah, London close setup. Yeah.
Okay.
And a lot of the time you see the news events that happen at 3.
Yeah.
Yeah, that's you can find London close setups there because 3 is 10 o'clock
All
New York
market
time.
close, isn't it?
No, it's 10 o'clock. You see when there's news events, so it's either 8:30 or 3 in it. 8:30 or 10, sorry, in it. FOMC is the one that's later on in the day. FOMC happens later on, evening time ish. Well,
Okay.
afternoon time, evening time for us, innit? You see the morning ones for the US is always going to be 8:30 and 10. This is why the sessions are like this, by the way. Like these time things, they don't change. Do you see my point? This is why things are so repeatable. It's not the fact that price is repeating itself. This is what people don't understand. You see people saying price repeating themselves. You see guys saying that online, but it's not price. It's the fact. It's the time. Everything is timed in the same way. That's why you're seeing the same things happen. It's all off of time. All these news events happen at this. Go on your Forex Factory calendar. The news events are the same days, right? Same weeks, right? Same times of day. This is why it's repeatable. Now, if you get the news event is at 10, right, at New York time, 10 a.m., then you can hunt the 10 to 12 London close kill zone. Other than that, don't, because it's usually start of sidewaysness. If you have a trade from New York as well, you can hold until London close, because that's usually gonna give you like a final run on a level. Given that on the chart it is making sense for it to run a level.
Yeah, that makes sense.
Yeah, sweet. Is that all? Cool. We'll wrap it up there because I think I gotta go as well. So, MF, send me the recording and I'll just pop that into the mentorship channel on it. Cool. I'll see you guys. We'll try to do one. I'll let you know if I can do one tomorrow. If not, I won't post a Spingy. The only time we'll do Zooms, I'll give updates for the Zooms like days ahead or whatnot, isn't it? Or in the morning of that day, I'll let you guys know if there's a Zoom. This one had to be early because I'm busy later on in the day. It will probably go back to the normal evening time because more people can come.
Thank you.
Yeah,
That's
so-
cool. Cool. I'll see you lot later, yeah?